Talk to me honestly. I'm here. I'm here. Talk to me. I'm here. I've been so far away.
Yo, what's up, everybody?
I don't
Let's get ready to get started.
know
Market trading Friday into monthly expiration. It's always fun.
in my mind. I'm not prepared this
Hi, everybody. See y'all.
Talk to me honestly.
All right, I'm starting in about 2 minutes here. Ready? Start filling it up.
I'm here.
What's up, everybody? All right, logging in all my things here. I gotta love when Windows decides to make an update like 30 minutes, or right when I log in, 30 minutes before I'm supposed to be live. I used to have it disabled where Windows can never do updates, and on my new machine, I forgot to turn all that stuff up. And when Windows decides when I decide when to update. Who are you to tell me what to do, Bill Gates? Louder voice, please. Turn the mic up. Hold up. I should be full blast if you guys can hear me. Hold on. Something weird going on here. Hold on. Can you not hear me? Is it better? Was it that the volume was just too loud in the music, huh? Oops, my bad. What's up, everybody? Let's get ready to go. All right, let's take a look. VIX doing okay. We are trading upper DD band, upper DD band, upper DD band. Yeah, log in all my stuff here. All right. How's it going? Let's watch out. BLD on SPY right out the door. Let's get my liquidity map front and center. Open this bad boy up. All right, BLD has that particular hedge pressure support, hedge to monthly hedge. Remember, this is, and we're actually opening above. So open Yellow open, open, yellow open, a nice little V shape here. Keep an eye on resilience today as well. Okay. Any break in monthly hedge pressure could be like a devastating move for the rest of the day. This is obviously monthly expiration, so let's be very cautious there. Let's get IWM. There are all these things up here. All right. Looks like we have BLD, mean reversion on Qs, and also there is no upper bull zone. That's interesting. So bouncing off a monthly hedge, at least expecting the first. BLD and BLD are all bullish-ish in a way. So as long as monthly hedge supports, we're good. Losing monthly hedge bounces off a hedge. So there's a couple different setups I'm going to look for today. A little V shape, maybe a 442 buy, but being very careful if we lose resilience, which it looks like. Let me go ahead and move this down here. Save my layout there. Music could come down a little bit. What's going on with my music? Did I crank everything up or something? It should be a little better. I can't even hear it. Let me turn this bad boy down. Oh, I remember what happened. A buddy of mine came over yesterday. We were jamming out some really good metal, and I cranked up the computer volume. That's why I forgot to turn it down. We're drinking whiskey and listening to metal. This is what life is like. It's a Coward household. And I got a little tipsy. I just remember walking upstairs, finished off a couple pieces of pizza, and then I just remember bass playing in the bed. I don't really get a chance to like jam out to music as much as I used to. So that was good. Now I remember why it was so loud. Losing MHP is terrible, especially on monthly expiration day. Typically, monthly hedge pressure and price will be close to each other as you approach monthly expiration. Okay, that's weird. I hit F5. Let me try something. Wow, that's interesting. I know that happens either. Let me make a note of that. I'm not going to do anything just yet. Deciding if I'm going to buy off the hedge pressures or not. How are y'all today? Y'all having a good day today? Just making sure I take a note of that. So I don't know if it's a Windows 11 or an Edge thing, because my save state loads them in the right spot, but it loads them with spaces. I don't know if anybody else is having this type of interaction. I know with some other browsers it should be fine, but my save state just kind of loads just like that. So I'm putting in a ticket to have them look at this, just to see if there's it might just be a Windows 11, like Windows Arrow, or always does those things. Does anybody else in their browser have that same kind of when you reload, it makes them smaller? Trader bait is frozen, really? My trader bait's not frozen. You might want to reboot your stuff. Okay, so BLD, let's take a look. Realized yesterday I dropped my my tablet. I knocked it off. I was in the middle of this really important meeting, demonstrating rocket scooter. I bumped my little tray with the handle on, like the pneumatic arm on it, and I just bumped it. The tablet fell on the ground and bent the frame, and now it doesn't turn on. That's okay. It's time to get a new one anyways. So now you have to hear me draw with my mouse. It could BLD just like this. If it supports here, Up to next resistance. Resilience is greater than 0, like that. Res less than 0. Down here. Breaking through hedge is bad. Question is, zone a scalp from 42, 42 and a half out of 5 point. I don't know if I really care about that. Same thing here. Meh. This is breaking hedge. Just be careful. We're getting some possible hedge breaks on monthly expiration. This can be a pretty gross day today. So I'd just be careful whatever y'all decide to do. Breaking hedge pressure never so good. Reses are pulling back. You know, usually, obviously the market's resurrected itself. Many times in res comes negative right out the open and supports, just like yesterday. I'm going to hope that we don't crash through and destroy hedge pressures, but you're liking this multiple chart layout. Is that something you can share? Like, I can share my layout with you. That'd be kind of a cool feature, but just build it yourself. Just take like 1 minute to do so. All I did was pop out the resiliences and make them big. And then pop out a couple windows. Click. I did a video yesterday on how to do this. So go check the platform tutorials, but you will do this button right here. Two different ways, or two different functions here. This saves your state. This loads your state. And you can do multiple monitors as well. Yep. All right. The question is, too long or not too long? Well, breaking hedge, not the best sign in the world. Is this the day that we finally have some pullback? Yeah, this is definitely a downward signal. DD's coming in at 94, so it means you're going to support bull zones. So it's a clear as day. Like today, rejecting hedge pressure to here to support there. That could be what today looks like. Keeping an eye on negative res, right? This could get pretty gross. And we already yellow line 44.79. Keep up here. Keep this up here on your own charts. 44.79 3/4. So I like to believe the markets don't want to collapse. Monthly hedge pressure days are always very sensitive to monthly hedge pressure. So if you create a gamma squeeze type environment, market does collapse on itself. It can be pretty gross today. It could be a big sell-off. It could be 30-point drop on S&P. Just keep an eye on resilience is telling all. So this is the thing. Resilience is negative. We're rejecting the box. So monthly hedge pressure rejection could be a market collapse today. I would say that I like to short when we're below monthly hedge. So if 442.5, I might take a short. I'm not going to jump in too early on this, but yeah, somewhere inside of here. If res is negative, when it bounces back up, I'm certainly willing to short this, knowing that such a positive DD has us supporting down at the bottom. QQQ and Russell both in hedge break state. So these are looking pretty nasty today. You know what I'm saying? It's actually one of the few days I might actually build a short. Keep an eye on S&P resilience. If resilience goes positive, we're breaking highs, right? We're going to fill the gap. So keep an eye out right here for these resiliences. Make these big front and center on the screen. Everybody hit that like button if you can really quick. 18 people. I'm gonna do a thing. I'm gonna do a thing starting next week. Because I have to ask every morning, I'm gonna take a random trip starting Sunday. And I'm not streaming for a week because y'all haven't been clicking the like button. I just decided 5 seconds ago I'm gonna take a trip. And I'm not gonna pull my laptop either. I love you guys to death, but I don't think I want to get up anymore. I'll just get up and trade and do it on my own. I'm just kidding. Don't make me be strict parent with you guys. Quick, you have to help out the algo. There we go. I'm gonna guilt you all into it like a baby. I'm gonna cry. I'm taking my ball and going home. Actually, I am gonna take a random trip next weekend, but I will have my laptop. I do need a vacation. I'm tired. I'm really tired. I would love a vacation. Bad news bear today. I don't like this market looking pretty nasty. You know, likey. SPY probably gonna sell pretty hard. Do you understand how this works? So hedge pressure breaks, not really good. Monthly hedge breaks, not really good either. This is what I'm expecting, at least to test here, right? If I get this, anytime res greater than 0, we're breaking highs, right? But res less than 0, bye-bye market. But at least we know we have support here. This could be a really nasty day to fall to support. QQQ's in that same boat. Let's go ahead and... Resiliences are pretty bad, right? Pretty bad today. I guess this is an old QQQ gap. Let's see if we have anything nearby. Actually, let's find some gaps on the upside. Make sure we have upside gaps here. Let's mark those guys real quick. So always make sure one of the things you upkeep every morning is making sure you're always aware where your gaps are. Now we have obviously been rallying, so it's be good practice to make sure you always keep these in front of you. Clone. Okay, this is the tried and true. Are we falling off today? I think it's a down day today. S&P's finding lower lows, breaking hedge pressures all across the board, all red lights, everything that goes. UVXY hedge break to the downside though. Interesting. So volatility starting to rescue itself. So let's see how this works. I'm going to see that volatility move. Let me go ahead and we just know everything's kind of falling today. I'm going to pull up a... Let's go ahead and make one more chart. I need to pull a UVXY. Let's put it right here in the middle. That's all a down day today, baby. It's got a couple micros on the short side, nothing big, just something small. Keep an eyeball for this UVXY breaking to the upside. We did open up here. So UVXY did open in like a bullish sort of thing. All right, actually, where am I going to put this? Just put it down here at the bottom. I also put in a ticket for the liquidity map letters to not be fixed pixel distance from the top of the frame. I'm going to have them fixed pixel distance from the top of the chart. I just want to see that we're trading above 225. If we get this movement up here, I'll be seeing it get acceleration on VIX. All right. Okay. Let's take a look. Make sure you always have your gaps marked, right? This is one of the major things you always must do when you're looking for exit targets, right? We teach in our classes on exit targets. Gap fills from longer term, like any trend up or down. Always keep track of where your gaps are. Because those are going to always be targets that anytime you're trading, these are always going to be like a... It's going to X where DD band's probably up here somewhere. Always going to be return targets when you're retracing, right? So these are all gap fills from the past, right? Gaps down, these are gaps up. So if it does ever come down, you have interaction points, right, to play with. Let's go ahead and... Yeah. So down day today, very easy to see. I just shorted a few micros at hedge pressure, and I was going to double down at monthly hedge, but it looks like this is going good. My trade taken off. Love it. Really a lot. This is pretty gross. That's a pretty easy setup. Did everybody see why this is happening? This is not hard at all to see. It's a very easy setup. Nothing alarming about this. Out the door is so fucking obvious. You gotta only push the short button like 4 times this year, I feel like. What up, Keith? What up? Been overly biased and delusional bear for a while now. Oh, today's gonna be a nice bear day. Looks like breaking monthly hedge pressure at monthly expiration. Just never a clean thing. That's a pretty bad sign. As you see, monthly hedge pressure, it decays towards price exponentially. So as you get really close to expiration over the course of the month, monthly hedge pressure tends to move up. Remember earlier in the month, monthly hedge pressure was like way off the screen. And now that we're getting at monthly expiration, monthly hedge pressure is very actionable. Everything is down today. Whenever you're near monthly hedge pressure, remember, we talked about this yesterday. We had some scenarios we practiced, right? Monthly hedge pressure resilience is just negative. This is a collapse day. And even with 5 micros, I just made like $1,000. No, sorry. $700. Easy as that. Not a hard day to see. This market is doomed today. Doomed. Yeah, hedge pressure. I always do. Like, that's when I told you guys I did. I said market right here. I'm looking for something like that. So I just put in a handful of micros and then I was going to throw pretty heavy right there. But anytime, like I said, red, even with hedge pressure break, I'm not in there long in the farm, right? I'm a couple micros. I put in 8 micros. It's a handful, not a lot. Or 7 micros, sorry. No, hold on, wait. Don't let me lie to you. 8. The answer is 8. $700, 8 micros. Give or take. Easy peasy. But red lights, so I'm trading small. I don't need to trade big. If this thing collapses today, involves 30 points, it's still almost $2,000. Just with a little tiny bit of risk. Qs and RTY are right. Garrett, what do you... Qs and RTY are right. Are you seeing this, Matt? What do you... Hold on, wait. We are now tapping yesterday's close, but that's not the case on RS. Very odd. I don't... What do you... Qs and R... You're all over the place, Garrett. Start over. We don't have RTY in Rocket Scooter, so we are now tapping yesterday's close. Here's what I want. Previous close and open do not match the Rocket Scooter platform. Okay, when you guys are talking to me on stream, do me a favor. Be extremely specific. I can't read your mind. So when you say yesterday's close, pretend that I can't see the ticker you're looking at, because that's actually the case, Garrett. I can't see your fucking screen. So don't say yesterday's close like I can see what you're looking at, right? Get used to talking to people like that, being specific, because that helps you when you're trading. I love you. Let's start over. Just like without the stream of text, just tell me what you want me to look at real quick. I want to help you out. Not sure what's wrong here, but the previous close and open do not match RS platform. Okay, let's start with the ticker. We love Garrett. He's one of my favorite people. I just love busting everyone's balls. Calm yourself, bro. All right, so let me read what you're saying. I'm confused. No change. We were tapping yesterday's close, but that's not the case on RS. So which tickers are you talking about? Qs and RTY are right. You mean Qs and IWM look good, but SPY is off? I can see Garrett's screen. He's a handsome looking fella. I can see him from here. Is it SPY you're talking about? So the SPY could be off on... Is that what you're saying? SPY's off? I love fucking with you guys. If I didn't make it fun and exciting, y'all would fall asleep here. All right. Halo. Yeah, maybe play some Halo today. I need to get my Onyx back, dude. I've been playing with solo queuing with randos. Getting hard stuck Diamond 3. And this new ranking system. It's hard. It's hard to solo queue to Onyx. That's for sure. Ugh. It's terrible. Every other game, someone drops off your team. Every other game. It's just never fun solo queuing. All right. You're still crying. You're still in platinum. You need to get up to diamond so at least you can queue with Matt. So like last time. Maybe Matt can log into your account and rank you up so you can play with us. Okay, Garrett. So Garrett, back to what you're asking. IWM, is that what you're saying? Okay, let me look at IWM really quick. IWM, you say the close is off, right? The close price is off. Let me double check. That'd be very odd. Those open and close prices rarely, if ever, off. 186.11. Yeah, that is not. Yeah, that is interesting. Let me double check SPY. This would be a straight data provider thing. We actually just use the close price and open price. We reference it. So we don't determine it. They deliver it. 442.54 yesterday on SPY. And they'll be slightly off depending on which brokers you use. Like I said, if you use like a Thinkorswim or something, it's gonna have all the exchanges. We don't buy all the exchanges. It's a cost saving measure. So you guys get $35. It will be off compared to another broker by pennies, not by dollars, for sure. Like my Thinkorswim says that yesterday's close on SPY was 1500. It says 442.54, and we have 442.61. It's close enough. Down the road, we'll buy all the U.S. exchanges. There's like 12 of them, and that's just a cost saving measure so that you guys can get cheaper subscription. You're still using MES M3, right? Not 4. U contract, Kevin. You rolled into U. So in the contract codes, the letter is a month and the last digit integer is the year. So 4 would be 2024. M would be the June contract, and then I think U would be what, September? Whatever U is. Even after 13 years of trading, I still forget the letter codes. S&P rolls what, like 6 times a year, 5-6 times a year, something like that. It's not every month. And then down day today, looking great. Michigan numbers in 6 minutes. Oh, thank you for reminding me. Michigan numbers did have a lot. You know what I'm gonna do? Thanks for saying something. Let's be smart here. Watch this. I'm gonna go ahead and close out my short right now. And when those Michigan, thanks for reminding me. And when those Michigan numbers come out, I'm gonna take a second trade. 5 minutes coming through. Yeah, let's go ahead and because people are expecting those Michigan numbers to be kind of booty and garbage. All right, does everybody know at monthly hedge pressure resilience is the tiebreaker there, and it forecasted a monthly hedge break. Let me go ahead and just take profit on that. Might as well. Put that in my pocket, be chill for a minute. Michigan numbers come out, and then I'll pick another short there. Smart. Thanks for saying something. I forget. Crims, my boy. You watching my back here. I'm too busy talking about stuff. Hot moms use zippers. Easy way to remember futures. I like that. Hot moms use zippers. Yummy. TMI. Matt has a zipper fetish. I like that's actually really clever. I'm never gonna forget that. That's really smart. So it's going to be the what is it? March, June, September, December. Something like that. Kings play chess on funny green squares. What is that for, Barb? KPCFGS. Keaton. Oh, from biology. There we go. All right, I'm gonna one up all of you guys. Almost Sokotoa up in here. Let's go. If you know that one, you're a bigger math nerd than I am. I'm sure everybody remembers that from from trade class. Chief Sokotoa of the trigonometry tribe. That's the sine opposite over hypotenuse, cosine adjacent over hypotenuse, tangent opposite over adjacent. Maybe you all remember that one. My teacher even had the Chief Sokotoa. It would be like, I guess, a meme looking type image. What do they call them? Image caption images. One of those things. Bringing back them old memories from 10th grade. PEMDAS, yeah. That one. Let's see some funny mnemonic devices that I remember. Oh yeah, I remember this one. Hold on. If you get that joke, you're a bigger fucking nerd than I am. If y'all remember that one. Rip pizzas. Although they have discovered a few other planets beyond Pluto that might classify as planets recently. The new telescope has found them. I think Pluto didn't classify because it was irregularly shaped or something and too small. There's all kind of reasons. But we found other planets that were actually bigger than Pluto and that outside the orbit. So they might have new planets. Too soon. I know, this is hurting everybody. Hurting everybody. All right, we got 1 more minute till Michigan numbers come out. Michigan numbers actually don't normally have big moves. They're normally mild-ish. Consumer expectations, right? They come in, but the last time Michigan numbers came out were really hot. The market moved pretty quick, and it's weird. On monthly hedge break, we're going to be sensitive. So the Michigan numbers... this is consumer expectations. Oh shit, I need to be on a space. I forgot. I'm so stupid. I won't, of course, let's see, where is it at? You're not live today? Oh, it isn't live. Okay, never mind. We good. Keith, literally, okay, Michigan numbers just came out. We bumped up to yellow line. Let's take a look. They've been pretty hot on the market lately. They've been making the market move. So let's be careful here. Coming in with the Infinite Lives Konami code. Let's go. Infinite Lives and Contra. It's the only way to beat Super Contra. That game was hard as fuck. If you remember as a kid, Super C was hard. Contra was hard-ish, but Super C was really hard. And I love one of my favorite games. Infinite lives. Okay, watch out for resilience is coming through. Hasn't cleared its orbit. Oh, yeah, that's all right, let's go. Numbers came in pretty low, pretty nasty. Let's see if there's any response there. Hitting that hedge pressure, bouncing off. Just be careful today. Let me investigate what's going on with the SPY and Q's prices for the open and close. Let's see. Let me double check Q's really quick. Glad I closed right before that news event. Why is that? 370.27. That's on par as well. What's up with SPY? Or IWM? You see IWM is off? Just double check that. Just IWM, huh? 187.53. 187.53. No, that all looks right. Am I missing something, Garrett? SPY is off. Okay, SPY is off. Let's go. But compared to what though? You have to say, like, when you say it's off, compare it to something. 442.60. The close price should be the right close price, though. 442.84. Is that correct? Let me know. That's wrong. That's wrong. You on the right day here. How off is it? 442.55. So it's only off by a couple of pennies, Garrett. Is that what you were saying? I just checked them all. They all look relatively close enough. How off was it on your comparison, Garrett? Like, what are you comparing it to? Everything's still looking bad for hedge pressure resistance. It's not looking good. Keep an eye on all these things here. Where's my UVXY chart? Okay. These musical covers are like hella dope. All right. I know everything wants to rally. This just doesn't look good today. Market could use a relaxation day. People are gonna roll. If people roll out of one into the other, that makes one makes a lot of sense. But all things are down. All things are down. And if we start breaking through, you know. Can somebody hear me? No, that isn't me. See if NASDAQ saves the market today. If we do break through monthly hedge on UVXY, we'd have all things breaking. It's actually not even hedge break to the downside is good. That's keeping the market from crashing right now. Actually a good sign. Just not looking good. It's fighting. It is fighting to stay alive. Futures are trying to push. There we go. There we go. Yeah, resilience still being negative. My data, let me just reload this. I keep trying these little features here. There we go. It's hard to imagine there being a sell-off day with the market being so strong. So it's going to be like, if it does, it's going to have to build its way over. See, there's no volatile. There's no fear of this market, right? Expectations of a sell-off are very low. People would be building into VIX, so it doesn't seem like there's much. And it'd be interesting to see if we do squeeze to highs today and the market rescue itself. Like I said, irrational markets, this is just if anything is tapped or played with, it's always just like small positions. Micros, not even really worrying about betting a big direction. All right, back. Garrett, appreciate looking at. Not sure why ES is so far off from SPY. It is what it is. Garrett, ES and SPY trade different. If that's what you're asking, that makes a lot of sense. ES and SPY trade differently. They're two different products. They both there's when they're off, they're always off. They don't track each other. ES and SPY have zero tracking to each other. SPY tracks the SPX, ES tracks the SPX, but they both have their own independent supply and demand. Why are ES and SPY off? Because that's how two different products are. They don't care about each other. Yeah. Like, they're both tracking the same thing, but they both have their own independent trading. So the ratio between the two is always going to fluctuate, sometimes wildly, and especially on expiration, right? SPY, every time SPY trades, like ES might open flat. If you watch ES open flat every day, pretend it opens flat for a week, SPY would gap way up or way down regardless. If the S&P futures went absolutely nowhere for a week, SPY would gap up, gap down, gap up, gap down, based on its own supply and demand of the product. And so that's what makes them stretch, is because they're independently traded on their own. And that's why you see that. I thought you were saying something was off on Rocket Scooter, and that was making me very concerned. You had me like raising red flags in my team. Like, don't say that shit and scare me unless you mean something's wrong with Rocket Scooter. You say, are you seeing this in Rocket Scooter? And I'm thinking, okay, red alert, let me stop what I'm doing and investigate the platform. You're asking, so that's why I say, you gotta speak clearly to me. Don't make me think there's platforms down or something's weird, because I'm freaking out. Heart attack, blood pressure going up. In the ES monthly hedge purchase within the redistribution zone. There is no redistribution zone on ES. That's a stock thing. It's an equities thing. There is no redistribution zone for ES. Number one, redistribution zone's an equities thing. When equities market opens and closes, there is no, the open and close for futures is the 5 p.m., 6 p.m., 1 hour difference. Don't make an RDZ matching 5 o'clock Eastern and 9:30 in the morning in futures when they close and open. Or 4 o'clock and 9 o'clock. Don't do that. That mechanism doesn't apply to ES. You got it? Everyone got it? The idea that SPY gaps up and ES gaps, don't blend the techniques. One is distinctly futures. Did I get stopped out, Matt? No, I'm short. 100% short. Not 100%, like 100% that I am short. I'm very confident in this move. Yeah. Be careful when you try to do things like differently. So the idea that you're going to have a little bit of deviation between two products, it don't mean anything. Redistribution zone is the gap created in equities market from equities close to equities open. You wouldn't do that for RTY. And if you do that and you match them up and RTY is trading outside of a relative redistribution zone that you try to create in futures, there is no mechanic because there is no gap between those times with an imbalance in futures. It just doesn't exist. So that's why, so be careful. Yeah, so y'all be careful with y'all doing. So if you're trying to draw a redistribution zone, open and close like this on futures, there's no mechanic. There's no imbalance of shares that are trying to be rebalanced at that time. Futures doesn't even have the MOC, MOO process that we're exploiting. That fills at the open and fills at the close. That entire process doesn't exist for futures. So there is no redistribution between those times. There's an open and close at 9:30 and 4 o'clock on an equities product. And if you were to match the futures price at that time, there's no mechanism for futures to behave against those relative open and closes. It would be the equities that would pivot. So you need to make sure that you are watching the equities price. You guys got it? You all on the same page? Let's move forward. Why is there a divergence? Because it's monthly expiration. Somebody's saying that all this combo is about pure Newbury. So essentially, you guys got to understand how these products work. I don't disagree. Let's get everyone on the same page. The reason SPY is going to move all over the place relative to futures, because this monthly expiration, it has its own supply and demand relative to today's expiration of these massive amounts of monthly options. So it will gap up, it will gap down, even if futures were flat. SPY could jump 2% if it wanted to, if there was a huge buy imbalance or sell imbalance at the open. And futures are going to be futures. They can do whatever they want to do. You will see discrepancies at all times, and more prominent on monthly expiration for sure. Ex-dividend day, quad witchings, all these different mechanics. People that has its own independent supply and demand that does its own thing. You guys got it? Friday only. So Monday. So in the monthly map, look at this. So all just shows all expirations. Monday, Wednesday, Friday is MWF. It's supposed to just show Monday, Wednesday, Friday. Now, these are broken right now. We put them in. They don't show anything yet. I say broken. We just haven't finished it. It's a filter to just show you to clean it up. So like, you know how SPY has these 0-day options? Well, SPY is getting very clean next couple weeks. If I just wanted to see like longer term without seeing all this cluster right here, we thought we'd do Friday only. It would just show the Friday, so you get like a week snapshot. And then Monday, Wednesday, Friday was a remnant of the old days before you had all those 0 days. So for instance, SPY, if you just wanted to see like a near term Monday, Wednesday, Friday without the Tuesdays and Thursdays crammed in there, that's what that was for. But it doesn't go all the way out. So when I say it's broken, it just, we need to finish working on this. It's just a filter. It just shows only Monday, Wednesdays, and Fridays, and this just says only Friday only. But clearly it shows nothing. That's the plan for it. That way, when you're planning your trades, it would give you display options so that you can come through, and also future proofing. Like if other instruments, for instance, stocks eventually had Monday, Wednesday, Friday options, because they all have just Friday options for weeklies. What if stocks Monday have Monday and Wednesdays? We're future proofing the platform to have the ability for you to show Monday, Wednesday, Friday, or just Friday only, depending on how you like to trade. Does that make sense, Udry? So this was future proofing all possible schedules of options expiration. All would clearly capture the 0 days, right? The every day. They're not really called 0 days. I just keep calling them 0 days. The daily expiring weekly options is the correct way to say it. But every day there is a 0 day that exists. So the idea that you have 2 weeks of Monday through Friday weekly expiring options on SPY and Qs means that it can get a little clustered, and maybe you wanted to remove some of the noise and just see like, okay, let me just take out the Tuesdays and Thursdays and just kind of get the overall trend just to decluster it. That's what that's for. And it gives that flexibility that anytime a stock or anything else changes, they create options for different products at different times. Then we would have the ability to, you just filter it the way you want to see it. So the only one that's really complete is all. Monday, Wednesday, Friday works. It just doesn't go further out than here for some reason. And I put in a ticket to fix it, but then I interrupted that process and told them we need to get our futures trading going. So we're working on futures first. And then as soon as they're done with that, we're going to circle back and correct that so that it shows what we want to see. All right, back to the daily mode. Let's see what's going on in the market today. Again, we're watching resilience. That's below 0. We're watching hedge pressure. That's break. Everything's breaking. Keep UVXY in mind. If UVXY gets above monthly hedge pressure again, the break is keeping the market from crashing and volatility. There's no fear today of this market selling. Nobody believes this market's going to sell off. VIX is just hanging tight. Very interesting to see that, right? I don't know if I like it anymore. You would expect it to see some falling on these hedge breaks. The fact that it's not falling makes me think that this is going to lose momentum to the downside, even though this is showing rejection at monthly hedge pressure. It might take an attempt. It might attempt to run for it. We'll see. Just everything's really bad. But then again, you have these independent supply and demands as well. So this is just saying that all things being equal, the index is moving and the stocks are moving below their redistribution zones. Everything's trading down. Take a look at Apple and some other big dogs. Tesla moving. Microsoft. Yeah. So he says, it's one thing to say you don't understand something on a chat with hundreds of people. It's another thing to declare something's broken. Yeah, just be careful saying like something's up with Rocket Scooter. Just be very clear, because when you say that, I immediately start assembling all of my team and like say, hey, something's up. Hold on, I'm getting, so like I'll immediately send out an alert and be like, hey, look guys, something's up. Hold on, let me get more information. Because we have this process here, we immediately troubleshoot. So if you are certain something's wrong with the platform, that's one thing. But just be careful in the future, because you're gonna alert everybody and everybody's gonna assemble. And everybody stops working. I have this rule at the company now, which you guys should respect. Whenever there's an outage, usually within 5 minutes, we're back up. If we can be. Because we have a whole protocol. There's a whole like ladder in which everybody follows. Everyone has a task they do. Everyone calls a different place so that we divide and conquer. And so like the minute something's wrong with the platform, people are already making phone calls before you tell me what it is. So just FYI. Obviously it's good to report bugs, but make sure anytime you have a bug to report, take a picture and put it in the tech support channel and just be like, hey Matt, check this out. I noticed something. Can you look at this? And I'll immediately go there and I'll see it and I'll go, oh shit. But if you're like, hey, something's wrong with the platform, and other people are like, oh yeah, something might be wrong. We assemble the troops before we understand what's going on. I don't hesitate. You understand? I know you're not a noob, Garrett. No, when you say something isn't right with Rocket Scooter, that's what you said. And that's why I'm trying to tell you. You have to be specific. Everybody here. This is for everybody, not just you. So just make sure when you guys are like reporting something, you don't make me feel like something's wrong with the platform, because I'm going to immediately assemble the troops. I'm going to wake people up in India. Make them get out of bed and come to work. It's nighttime over there. So y'all just be careful if y'all are trying to say like something's wrong or something's off. You specifically said, not sure what's wrong here, but the previous close and open do not match on RS platform, right? So this is what I'm saying is be specific, because all those things tell me there's something's wrong with the RS platform. So I'm going to be like, oh, goodness. Let me say that. That's not for everybody. That's just to help all of us out. When you say that, and then you don't say like what ticker, and then you say, well, something's off with futures. We don't even have futures data. So what I'm just saying is, I know you're not a noob, bro. We love you to death. This is a note for everybody. Yeah. Right. When I see a word like that, I'm immediately typing to people, hey, stand alert, possible bug, possible data outage. Like data outage, the highest priority. When there's a data outage, people that work for me are required to get out of bed. I don't care if it's a fucking holiday or you're on vacation. To stay employed with Rocket Scooter. When there's an outage, we have a no outage task force. You get up, you stop what you're doing and help. So I'm saying is, don't pull the alarm and say there's something wrong with RS platform, or I'm gonna be waking people up and crawling out of bed in their pajamas to run their computer. Yeah, it's like pulling the fire alarm. I'm saying this I'm trying to be lighthearted about it. Just when you are reporting anything, the best way to do it is take a screenshot, throw it in tech support, and then tag me like at Matt, check this out. And then I'll look at it and be like, oh shit, let me pull the fire alarm. So yeah, it's burning. Everybody get out of bed. There's a data outage. Let's go make and everybody's making the phone calls and they're online. Everyone's waiting. Okay, what's the problem? And then I tell them, okay, this is what we're getting. You know, it looks like open and close price are reported incorrectly. Let's investigate. We know the pathway. Who needs to be on the phone? Who needs to be awake? So if it's like something is off mechanically or something's off with the platform features, oh yeah, everybody's on it. And that's we take passion. We will get out of bed and be on it because we want to make sure that you guys don't have any outages. Faux show. Yeah. No, but see, here's the thing. We aren't talking about anything because there's a delay between the stream. If you say anything, just make sure. I'm just telling the notes I'm giving are everyone be specific with what you report to Matt. You say, hey Matt, here's a picture of what I'm seeing. Can you explain this? Or hey, here's a possible bug. This is what I'm seeing. Or say, hey Matt, I have a technical question about futures. Why are futures and SPY off? And put the tickers in your commentary. And just because when me, you know, pretend that I'm scatterbrained and I'm currently on a space with 2,000 people and I'm currently talking to hundreds of you guys. And I've got a whole tech team waiting for me to give a report as to what they're supposed to do with their time. You see how that works? So I'm losing track of what we're talking about here because I'm talking to a ton of people at once, right? There's that monthly hedge pressure tap. Let's go. There it goes. You know, the volume usually goes down around 10:30, 11. Would you still short MHP? Mechanically speaking, it is what it is. The market's going to move in a certain fashion to facilitate this monthly expiration. So I think it's just trying to connect with monthly. That's what I'm looking to do. I just added a few more micros to my short. Again, just building for a potential. This doesn't have that sell-off look, and there is no volatility to it. Unfortunately, you would not see this continue to short squeeze higher like it is. So it's gonna have to. I'm gonna need volatility to start coming through. That's why I've got VIX front and center. It's just there's no volatility. It's very liquid right now, and the short squeeze is still being facilitated. And the idea that monthly hedge resilience is negative is still that mechanical thing. And if we start pressing through here, then obviously clearly I would close out. So yeah, there's micros, spent a couple $100, nothing really too big though. Yeah, but Garrett, when I talk about that, buddy, I'm not like talking about you. This is a note for everybody, because a lot of times people just don't think that I'm not paying attention, or think that I'm paying more attention than I am to things. And me being bounced like 1,000 different places, you just gotta like be very direct with your text. I tell Nicole the same thing when she talks to me, because she's like, hey, remember when you did that one thing and put that one thing in that one place at one time? And I'm just like, wait, what? Remember we were just talking about it. I'm like, what do you mean? It's like, we're talking about it 5 minutes ago. I'm like, 5 minutes is like an eternity for me. A million things have happened in 5 minutes. And then like people get mad and I'm like, I'm really scatterbrained and I'm pulled all over the place. So if I was talking about SPY and 5 minutes later, then after a 2-minute delay on the stream or whatever, and then or 20-second delay on the stream, I'm gonna lose track. So y'all just, everyone be direct with any questions, even if it's like we're talking about it live, because even with the delay, we could have moved on to a new subject. Okay, this is that rejection at monthly hedge. We're starting to get it. It's going to have some kind of hold in between the two hedge pressures. So, but it's still not looking super hot. The index is going to have to move on its own away from the stocks. The stocks are not holding monthly hedge pressure. The stocks themselves are getting that gamma squeeze to the downside. Let me go ahead and go up here. Let's go to monthly hedge break to the downside and just kind of see what is being broken. 12 stocks or less than monthly hedge. How many are less than monthly hedge? One. Remove. Oh, sorry. Less than monthly hedge. Almost all stocks. Monthly hedge break. I got the list showing what we got here. Seeing DD94 and just learn DD greater resilience, greater liquidity map. How certain bearish outlook can you beat? Okay, so let's take a look. Now DD, remember, not everything is just directionally pointing. DD means something. It means the bull zone is support at the bottom. That's the only determination we can make from today. DD also means it would prefer to not touch the lower DD band first before the upper. And lower DD band is way off the screen and upper is way up here. So DD being bullish means that it's just likely to float off the bottom DD band, which is way down here, and it's likely to support at the bull zone. That's all that it means. DD 94%, SPY opens in the bull zone. Very probable it closes in the bull zone, but that's anywhere in here. So it doesn't mean that the market's going to press higher. It just means that we're going to stay in a bull zone. So it's like we're not going to be here. So far, so good. So that's a very strong certainty. Resilience being negative means this is resistance right now. Monthly hedge resilience negative means that's resistance. Hedge pressure support means that we're pushing in between those two right there. Any break of hedge pressure is just bad. If that happens and VIX gets above here, then volatility takes off and we could do that today. That's a potential trade setup. So DD being positive gives me a span of how far it can go on the downside. Now, with the hedge pressure breaks and it not collapsing, this is a pretty decent sign that the market's likely to hold today, or at least make an attempt to hold. Last little ditch effort just to see if there's buyers here. This shape is short squeeze shape. So when the market dips, shorts are willing to cover, but as you see, there's no volatility, so it's not getting a lot of downside momentum. It needs to pick that back up. I think as soon as European markets close in less than an hour, you're going to start seeing the market mechanically take over. But like I said, all signs are pointing down today. You had a potential hedge break, a potential try to recover. If we're back below hedge pressure, it's going to be really nice. And then where do we go from here? This will change to a BSD. Let me show you what a BSD is. Let me show you that neutralization point. BSD. Falls to next resistance, right? That's what that means. Where is that next resistance? There isn't one. There literally isn't one. Period. There gap fills way off the board. The next resistance is the bottom of the bull zone, right? So this can be a really, really bad day. Actually, I like what I see. This is a really, really bad day, which is great. Really good. Really good. The only thing in the way is this yellow line on the S&P. Believe it or not, inside of DD bands, you will sometimes see a yellow line be a support and resistance. This is a big deal. This was resistance. We broke through. If we break below it, that's the only thing floating this up right now. So keep, what's the number we talked about this morning? Keep 79, 75 on your screen. Round to the nearest tick. This is the only support there is. So the next resistance is right there. So there will be support clearly off of that. That's just a mechanical thing. Illiquidity pivots create supports. So if you want to see this market sell off today, you need to see some volatility come back in. This VIX just hanging. There is no volatility. There are enough people buying as there are selling. The market's liquid and holding flat. So it's going to have to build volatility. Markets have to become thin once everyone settles out their position. All things being equal right now, this market looks like it's coming down. Very easy to see. It's a down day. In my heart, in my soul, it's a down day. It's fine. Your mistake. You'll keep your thought. No, Garrett, God damn it. Don't keep your thoughts to yourself. Dude, I spent way too much time talking about this. Just speak clearly. Post a picture. Have me look at your photo in full screen. And don't say problem RS platform in same sentence. There's not a problem with the platform. Just speak direct. Don't keep your thoughts to yourself. Just change what you do. I love you, but that's not you just waste an hour of my time having to explain what I wanted you to do for you to say, well, I'm just not going to talk anymore. I love you, man, but Jesus. Everyone, just explain clearly what you need from me. If there's a problem with the platform, say there's a problem with the platform and post a screenshot so I can see it. Please speak up, but just speak up differently. Just change that so I don't wake up Amjad when he's sleeping on a false alarm. Don't just keep your thoughts to yourself. Keep your thoughts active. That's why we're in a stream together. I come here to hear what you guys want to think. But you have to talk to me directly like I'm a fucking moron. That's what I'm saying. Like I'm a 5-year-old, like I'm a golden retriever. You need to give me direct, don't touch this ball and spray me with a water gun. And then I'm as a dog, I'll learn that. You just be like very direct. I can't see what you see. I can't read what you're thinking. You have to be like, let me just explain to Matt. Hey, Matt, there is a problem. I'm noticing that SPY and ES are different. I drew a redistribution zone on ES, and I'm noticing that it's gapping down and SPY is gapping up. Can you explain the difference between that? And I go, oh, let me explain that. Okay. Because like I'm so scatterbrained and ADHD. I'm trying to cut back on the Adderall because of my blood pressure. So I'm actually a little more stupid than normal. It's all on me. You know what I mean? I don't have the attention span I used to have because daddy's trying to go clean here. Trying to clean up and have healthy approaches to his ADHD. It's not methamphetamine. Squirrel, shut up. Where? Where'd it go? So that's all I'm saying. You got to be super direct with me because I'm the idiot. You're not the idiot. It's me. Trust me. Like I said, Nicole gets pissed off at me all the time. She's like, do you not pay attention to what I said? And I'm like, can I be honest with you? I kind of wasn't. I forgot what you said. And she's like, but I just told you. And I'm like, I know. That's the bad part. You just told me. I promise my heart's there, though. My brain is wired different than all of y'all's. I'm all over the place. Like I said, I have severe ADHD. It's really bad. And I jump all over the place, from spaces to stream to Discord to meetings to whatever. Matt saved your ass. He called this bull run. We debated him about being in a bear market. I remember when I met Waylon, and I told myself Waylon's gonna be one of my favorite people. Impassioned fella. Wasn't afraid to speak his mind. All right, let's go. How's my trade doing? $800. That's good. Let's go. Let's get that pullback. Garrett's one of my favorite people too. You've been here for a long time, brother. I'm just saying to everyone, you're not the only, this is the first time you ever done this. Everyone here does this and it pisses me off. That's what I'm saying. This is a note for everyone. If you have to phrase a question to me on this stream, like if it's a problem with the platform, you be like, hey, look, I think there's a problem with the platform. Can you investigate? Sure. What's up? You're like, the data doesn't match an RS platform, and I'm on high alert mode. I'm like, oh, everybody get ready. There's probably a bug. Hang tight. And everybody's like, hey, Matt, what's the bug? This is for everyone. Y'all got to be like super clear with Papa. Even with 5, 6, 7 micros trading, this is my second trade today. up just like I said, red lights trade small. If it starts to sell, I don't need a huge position. If we do fall today, I still can make a couple $1,000 just on a handful of micros. That's the best part. Okay, so also I really want to start putting that. I was just demonstrating the platform full screen. Here's what I think we're gonna do. As soon as we get futures trading in here, I'm gonna migrate my TradeAvate account to my new broker, and I'll do all my trading in Rocket Scooter. So you're like, Matt, are you gonna show your TradeAvate anymore? As much as I'd love to show a competitor's product, we're gonna have what we call the manifest destiny goal of Rocket Scooter, which is coast to coast ownership of the continent. So my entire screen will not be shared with any competitor, no matter how awesome the company is or how much I love everybody that works there. Rocket Scooter will be full screen, baby. And so I'm gonna do I want to do all my trading featuring there, like that. Let's go VIX. That's what I want to see. That's good. I want to see some volatility growing. That old video, YouTube video, the website is down. Yeah. I get really, honestly, the reason we got on high alert, we learned our lesson when we soft launched back in May of 22. You guys remember that? June of 22 was a disaster for Rocket Scooter because what happened, so many things happened. We had website membership issues, you couldn't log in, you couldn't access the platform. On top of that, we were getting data feed issues to go with it. So we had 2 major malfunctions and we weren't staffed appropriately to handle it. So we overworked everybody. Everyone was getting paid overtime. Everybody's working nights and weekends. Everybody's yelling and shouting at each other. It was a learning curve for us. We scaled too quick, and in May when everyone loaded up, remember we rolled all the old DTP folks into Rocket Scooter that month. We had 1,000 people just roll into Rocket Scooter and then overwhelm the servers. And then we didn't have a lifetime way for them to get in. We had to create all these things that we didn't think of. We didn't plan that for that a massive amount of scale. I didn't think people were going to roll in that quick. We tried to stage people rolling in, and even that was enough to prevent. So we had all these issues back then. So then we created this troubleshooting protocol, and now we created this process where when we release something, there's all this, the way we test it, spot test it, have people test it, a group of people test it before we release it. So now we don't have those problems, right? But the result of that was I have everybody, there's a script I made, and it's like a little ladder. And anytime I send the message, this is active, right? This is what we're doing. Everyone knows what their part is. One person gets on the phone with one group, one person gets on the phone with the other group and starts calling them even before the problem's reported, because what happens if their number's busy, right? Doesn't matter. We've already left them a voicemail. Hey, we need to get back to you. There's a problem with the platform. And by the time they call us back, we typically know what it is so that immediately they can get on it. And so that has been a very successful thing. And we staffed up to have somebody in India, somebody in London, and somebody in the United States available. We have 24/7 coverage for these problems now too. But I make everybody come. And between 9:30 and 9:45, everyone's required to be on guard, doing nothing else. And every morning, Amjad does a status report to me that the pre-market data is there, that the website data is up, that the login. So he has a checklist of things he does every morning. And it's nighttime for him. So usually it's right before dinner for him. He'll get up and do pre-market check. The login servers are okay, the apps are okay, the connectivity's okay, data feed's okay, website's okay. Check, 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 check. And he does a status report for me every morning. And then when market opens, everybody's waiting next to the phone ready to call who they need to call in case data ever goes down. And that's why our downtime has been minimized. 3 to 5 minutes, we already know what's going on. Imagine in June of last year, there was a month where we didn't have, the platform was down almost for an entire month. It would come up a day and be down a day. For many reasons. We overloaded all of our systems, all of our data pools, you guys come into the platform and pulling all that resilience data and all that stuff, or calculating resilience, was just way too much for the server to handle. So we've since expanded our personnel, but the system is still there. Everybody's on high alert to make sure they don't sleep. They don't fall asleep when problems are there. So I will ring anytime they say there's a problem with the platform. I'm going to ring the bell. Better safe than sorry. So that's for everyone. Haven't checked your stream in a while. Still good. Still halfway there. Still pushing. Guess it's a good, bad problem. Glad you're in control driving the bus. Well, I mean, this is my first time ever running a software company. I had to learn these things the hard way. I had some friends of mine that were executives in different various software companies. One of our teammates, 30 years of software experience, project management, security, everything. And he came in and was like, you know, you should do this, this, and this. This is pretty normal for what your kind of software. And I got a lot of good advice from a lot of really smart people. And teach my dumbass how to run a software company. All of my project experience and process experience and management experience was all in oil and gas, which has a similar-ish kind of approach, like troubleshooting and process troubleshooting, checks and balances, you know, lockout, tagouts, all kind of ways people make sure no one drops the ball. Like the chain is very, very greased up, very few hiccups, but it doesn't translate to software at all. Software is a very weird animal, I've learned. Anybody working in a software business, it is a very weird, it's its own thing. You cannot, no experience in project management, no experience in management of people, no experience of anything will translate to dealing with developers, process flows and software data and all that stuff. It's a completely weird and unique world. I love it. I love it now. When you estimate futures on RS being active, it is almost done with its testing. Within about 2 weeks, I should be able to test it on the test server. So I'm going to test it on the test server, and I'm probably going to run it myself for a week. I'm going to throw some money into my account and start trading it and just making sure it looks good. And then, of course, like anything else, we'll probably roll it out to lifetime members first, just to not have, you know, 4,000 people jump in and sign up all at once. And then we scale in, and then we scale into Pro Plus, then we scale into Pro, et cetera, et cetera. Down the road, just FYI, live trading will be a Pro Plus only feature. So when you join the free trial of the platform or the extended trial of the platform that's only Pro, you must upgrade to have the accessibility to the live trading features in the DOM. So right now, Pro and Pro Plus have no difference in the platform, but as more features come out, live trading will be Pro Plus. You must be in Pro Plus to have that. Just FYI. Would you be able to connect to the prop firm using Tradeovate? Completely decent question to ask. The answer is when Tradeovate allows that, we'll be the first people on that. Tradeovate is a weird, in a weird spot right now because of the merger with Ninja. Tradeovate used to have an API that third-party developers can connect to. You will be able to trade through Tradeovate because the web API allows you to submit orders with the platform. So we'll be able to have you submit orders back and forth to a Tradeovate account. But that's it. You're not going to be able to connect to it, get your account balance, get your trade history, nothing. You'll just be able to send an order and get a confirmation. That's it. So you'll have to always know what's going on. So a lot of the brokers that we're connecting to will be like that. You'll be able to send an order, but the broker doesn't send any outbound data. You won't be able to track your account performance, anything like that, except for the broker's platform. And that's by their choice, right? So when I say is we have a group that's going to be on top of these connection things, a big part of our business model is connecting every broker on the planet. And so when they change and they release new API documentation and new things, we'll be the first people on it. But since Ninja is a trading platform, albeit, you know, a very, you know, I guess, I don't understand this. Ninja Trader's reaching its maturity, just like Thinkorswim. It's a platform that's on its last couple legs. Tradeovate, however, made a very awesome web-based platform that is new and modern and will stand the test of time. Ninja's slowly becoming obsolete as far as, you know, its process, its design, its kernel, all of it is very antiquated for modern software. So like Tradeovate and Ninja had the asset of NinjaTrader, right? It is a platform. So part of their business plan, which I understand, is to not have third-party platforms connect to their service. They want you to all be like a one-stop shop. So they don't want to extend that connection to platforms like us because we're competing with one of their major business units, which does make sense, and you can't fault them for making that choice. So the idea is they shut everyone out for, you know, for a good reason, they believe. But they did leave the API open for like you to talk to by submitting orders, right? You can still submit an order with a webhook to your heart's content, but you're not gonna be able to connect to your brokerage account with a prop firm and get all that status stuff. You would likely, if possible, you'll be able to connect to your Trade-of-8 and send orders through Rocket Scooter for that prop firm, but we won't be able to track information. Nothing, right? So it's kind of like Trade-of-8's in this weird, I like to say, puberty phase where they're still discovering themselves and like how the merger, what they want to do with the business, and they're trying some new stuff. And this is a new development. Like this is something that's been in the last 5 years changing. So hopefully in the next couple of years they might decide, you know what, let's allow third-party developers to connect, and then you can, you know, log into your Trade-of-8 account through here, and then your account history's up, your performance history, download reports, all the different features of Trade-of-8. I'd love to have that. That'd be super sweet. But the only so the answer with Trade-of-8 specifically is you'll only be able to submit orders and receive order confirmations, but you'll be able to trade, which means that if, like I said, you log in to your Trade-of-8 account inside of Rocket Scooter, you will be able to send orders for your prop firm if all things are okay with that connection, which it doesn't seem like it would be. You're logging into them. The webhook is open even for sim accounts, so the answer is yes, but you'll still have to have your Trade-of-8 platform open if you want to look at anything else related to your account. Volatility coming back down today. This market just loving this bounce around. But the answer is I'm just speculating. I won't know until we test each one, right? Like the full capabilities as we so we haven't begun programming into that one, but in our plan, that's what it seems like we'll be able to do with that one particular broker. So the futures update now, to get full futures account data and all that cool stuff, the way that that's going to work is that you'll be able to, this is a whole different thing. So any of our future broker partners, there's like 80 of them, you will be able to literally log directly into your brokerage account, and that brokerage account will be connected to Rocket Scooter. There's going to be two different ways we go. So with our connections, you're going to have what we call a full connection and a partial connection. So the way that it works, I might go all the way into technology. A full connection means you'll be able to click a button, say generate report, and boom, generate report when we get all those features there. The full connection would be any account details you want. It's such a full connection that if you pay your broker for data feeds, they'll even send the data feeds forward. So to get futures data, you'd have to have a brokerage account with one of our partner brokers and pay them like the $10 a month. And the connection, the socket's open. They will send candle data for futures to you. So it's a two-way street. You can talk to the brokerage account, they can talk to you, and all kinds of features. Each, depending on what the broker has available, you'll be able to connect to it. Like it's almost like this is the platform for that brokerage. So all the cool features you would want. A partial just means that you would be able to communicate an order, and they'll communicate a confirmation. Like, fill this order. Okay, we filled it. And we'd have to write some kind of pseudo tracking that would say like, okay, this is your position. An example is if I shorted 5 contracts and I'm down $1,000, the broker's telling me, hey, he's down $1,000. If over here you shorted 5 contracts, they say, cool, you're short 5, and that's it. We'd have to write something that would know when you entered, because they'll send that confirmation, and we'd have to write local tracking of, okay, what is this person's actual profit and loss for that trade? Because the broker isn't telling you, so we'll have to estimate it. And it will be based on your data feeds here. So like I said, there's a degree of inaccuracy because that chain is not fully connected. It's not your actual P&L. So it'd have to be like a little asterisk that says, P&L is estimated, please consult your broker for the real number. I hope you guys all follow that. So each broker we connect to, you'll have to have one of 2 things. This would be completely accurate to your actual P&L. This would be accurate based on the order you got in would be filled at exactly a price check. If our candle data says you've moved that far and this was your order, you should be down this much. But clearly if our candle is updating every 2 seconds, you're going to be off by a fraction of a fraction, right? So you always will have to consult. If it's not a full connection, you'll always need to consult your broker for your actual P&L. And again, the limitation is not with us. The limitation is that broker doesn't have an API connection. But the idea to connect to all the brokers, many of them allow you to specifically connect and send order strings through webhooks and other things. So any way in will get in by some way. Even Tradeovate has a way in, even though they tried to cut all the ways in out. You can still submit orders for the documentation. So pretty neat, right? You're just looking like a sexy sell-off day today. I'm not hating it. So essentially the answer is good enough. But when it comes to prop firms, you're going to want to be very accurate. So you still want to have your actual P&L open, and you'll want to have Tradeovate still open so you can actively monitor your stuff, which is the convenience of having Rocket Scooter be your platform you trade with. Like if you were trying to set alerts to make sure you don't bust a prop account, you would rather set your alert with Tradeovate instead of your alert with Rocket Scooter. Because it will be based on our candle data. The one thing is, if you can't connect to Tradeovate, you won't have futures data here. You'll still need the futures data from a partner broker. They're not going to give us data. So if you log into your Tradeovate account, you won't see futures candles. You still have to connect to a broker that you buy data with. Like I said, they don't open a connection. So like while you do buy your data for Tradeovate through your prop account, like let me guess, you do like an ETF or something, then you go pay the $20 or $17, whatever it is a month to get data. That data only supplies to the Tradeovate platform and the Ninja platform. They don't send that data to us. So if you have a prop firm account that you connect to and send orders back and forth, you will not see ES candle data or ES data in the DOM. You'd have to go get your data through one of our partners who do supply data outbound and pay them an additional. So what you would do is you'd sign up for a prop firm, don't buy their data, plant some cash into one of our partner brokers, and then buy the data that way. And you'll get their data on the DOM and their data in the candles, and then you'll open the DOM to trade. It'll be their data, and it'll just send the orders to Tradeovate that way. And like I said, we have to be clever, and as those technologies develop, we want to be on the front end of this, right? As these companies develop and evolve to the ability to have like more people connect to them and open up their doors for third party, we'll be the first to connect to things. Like we have a task force designed to make sure we are first. Like if the first day Tradeovate goes, hey, congratulations, in a month, we're going to allow third party developers to develop in, we will be the first platform with that feature. We will make sure that we are always first to connectivity with the extent at which you can connect. So by the end of this year, we will be the most connected trading platform on planet Earth, connected to the most brokers. And we will constantly maintain that first place spot by always being first when a new one opens up. Thought it was going to be for a minute there when VIX popped. I guess not. It's trying. It's trying really hard not to sell off. But all the data looks really bad. The idea that it's not crashing has me a little suspect. But hey. You might have thought it when you messed up, you signed up because you had Pro Plus. So here's what you have to do. And like I said, when you sign up for the extended trial, Pro Plus is those pop-up offers that show up at the top of your platform. They'll show up in random periods. Once they go away for good. So if you missed that pop-up in your first month of extended trial, it's $35 a month. And on month 4, you're going to go up to $200. After month 3, you go to the full price. If you take one of those pop-up offers, you lock in a very substantial grandfather rate forever. So that's how you get into Pro Plus. Other than that, you're paying $200 a month on month 4. So if you missed that pop-up on your first month, I will let you today be like, hey, I missed that. I didn't know it was there because it might have not been prominent. I will sign you up for Pro Plus at that rate. But you have to contact me today. It's definitely under $100. And you can lock that in for life to not have to pay the 2. But the Pro, the extended trial, will not have live trading. That is not going to be available until you upgrade. Just letting y'all know that now. You have to be Pro Plus. Yeah, the best part, they're saying, you don't have to worry about any Greeks, Keith, with futures. That's like the best part too. Futures have no Greeks. They're just an independent supply and demand. They're fixed price contracts. So no matter what the value of the S&P is, it costs the same amount of money to buy a futures contract. A futures contract is like an option in that it's the right to buy or sell the underlying commodity. Actually, it's not the right. It's the obligation because it's a contract. But no Greek decay value. So like essentially if S&P was 50,000 or S&P was 4,000, the contract still is the same amount of money. It doesn't the price to invest in a futures contract doesn't vary with anything other than the margin requirements set by the exchanges themselves or by the clearing firms themselves. So the neat thing about the differences are like if you trade SPY. If SPY is $441, you have to pay $441 to own it. If SPY is $450, you have to pay $450 to own it. If SPY gets higher in value, it becomes more expensive to trade. Futures does not have that. If SPY becomes higher or lower in value, it does not become more expensive to trade. It's the same to trade. The periodic changes of margin requirement depends on the environment a couple times a year, give or take, for S&P futures. Oil margin requirement changes like every week. Different contracts have different spans in which they do that. Typically those, and with options being a contract, and stock being or futures being a contract, the obligatory nature of the options contract is only to the sell side of the option, meaning that somebody who sold the option is forced to exercise if the owner of the option chooses to exercise. So only one half of the party has an exit clause. The buyer of an options contract in equities has a right to back out of the contract. They don't have to exercise it if they don't want to. The seller must be obliged to provide the assignment if the buyer of the contract chooses to assign. So in futures, both parties are obligated. You can't back out. If you own a futures contract to buy oil, the person that sold or created the contract to sell oil must deliver the oil to the buyer of the contract. Every contract that exists represents 1,000 barrels of oil that somebody's willing to exchange hands with the owner of the contract. So that's the difference between the two. So because the options contracts are priced based on a model, typically like Black-Scholes or a variant, that's designed to set a fair options price based on the probability of that option striking at the money on expiration day. Pricing is designed to reflect that. Then the options contract will decay or raise in value based on the probability of that being the price of the underlying at expiration day. Futures doesn't care about any of that. Futures is how much money you have to fork up as an ante so that when the option expire or the contract expires in futures, you got to fork up the rest of the money to buy the commodity. An example with oil, right? Say oil is trading like $60 a barrel. So say if oil is trading like $60 a barrel, and you bought one oil contract that represents 1,000 barrels. Say your broker charged you $8,000 for that contract. It's just an ante to be able to hold the contract. If you have that contract when it expires, you have to buy 1,000 barrels of oil at $60. You have to come up with $60,000 when you only put down 8. So you come up with the other 52,000 because you're contractually obliged to buy the commodity. So because all it is, all the price at which the contract is not marked to a price like an options contract. It doesn't have Greeks to accurately price it or to accurately determine like price changes of it. If that makes sense. So you don't have Greeks in futures. That's a long-winded answer to say why you don't. Because oil futures are just trading to bet that the spot price of oil will be the exact value that the futures are trading now at expiration. Imagine you're trading like an oil, for example, and oil expires at some point in the future. And I'm trading that contract right now, and it expires in 2 weeks. Whatever the value of that contract is now is trying to say that the spot price of oil will be this price in 2 weeks. So it's trying to get ahead of fluctuations of the spot market. But again, it has its own supply and demand, and the futures and spot market can deviate as well. So the idea is that futures is just trying to guess what the price of the underlying asset is on expiration, which options also try to do. But the options themselves are priced on an underlying thing that is traded on an exchange. Commodities are priced on an underlying thing that are traded physically off the exchange. There's no exchange for me calling my friend and saying, hey, deliver some oil to my plant. You have a boat with some? Okay, cool, send it over. So there's no like sophisticated Black-Scholes kind of thing that can monitor changes in the underlying very rapidly in real time. When the physical deliverable is traded through handshake deals and real life exchanges, people hand over oranges and pork and wheat and corn to each other. So you don't have a oil contract. Now there is some type of way that they value and estimate where that contract will expire, and like the way that the market makers set their bid and ask. But because there is no because the options contract expires worthless when it's out of the money, then you have a probability that it expires worthless or not. An oil contract or any commodities contract never expires worthless. So because of that, there is no Black-Scholes or pricing equation that can determine the probability that it expires worth something or not. It always expires worth something. The contract just assembles the buyer and seller to buy and sell from each other, and no one takes a loss at any point in the middle, despite what the contract is priced at. You anteed up to clearing, they took their fee, and they made sure the buyer and seller buy and sell the commodity from each other. So those contracts always expire with some value. And any value lost is value lost between the buyer and seller. If you sold an oil contract, if you sold an options contract and it expires out of the money, then you made the whole value, and the person that bought it made nothing. There's no exchange. So the probability that futures contracts, they just can't expire worthless. You don't have a probability equation that determines the probability at which they expire with value, like Black-Scholes, and that tries to price them accurately based on probability. If someone has popped up, would be love to get into that. I don't know. The fact that it's not crashing right now, I've closed all my shorts. I don't like what I'm seeing. It might sell off by the end of the day, but the idea that I'm not seeing volatility, I'm not going to see some action, it's choppy, just close everything out. So it's just a weird thing. But the cool thing about trading futures, it's just like trading stock. You won't notice any difference. You buy a stock, it goes up, you gain money. You buy a stock, it goes down, you lose money. Futures, you buy the futures contract, it goes up, you make money, it goes down, you lose money. If stock sits flat, you sit flat. If futures sit flat, you sit flat. You won't feel any difference other than futures allow you to lever up many, many, many times more than stocks will. You don't need a PDT account either. That rule doesn't exist in futures. So you have to be very careful with self-control to not over leverage. Like futures and S&P, I think you can lever relative to SPY. I think you can lever 4 to 1 in equities, right? You can lever like 25 to 1, dollar to dollar in futures based on intraday margins. Futures brokers love to give you extreme amounts of margin to trade with. So don't be careful not to use it. If the contract costs $10,000 and your broker says it's $500, I see people, and here's the thing too, and be careful who you follow. I saw this YouTube streamer. This dude used to stream, he used to blow up on stream, and then he disappeared all the time. Teaches people that these futures contracts cost $500, blah, 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 and that's absolutely 0% true. Your broker, they still cost the full amount. Your broker ponies up the money, and that's actually called margin. So if you have to go in and you pay $500 to trade a futures contract, and that's not the margin requirement of the contract. The margin requirement is set by clearing firm, and CME Group sets a minimum value for that the clearing firm cannot go under. There are performance bonds that are issued against that debt that is issued to you when you borrow the money to trade on margin. The money that you borrow, technically speaking, you're not borrowing any money to trade with. Your broker is filling the pot on your behalf. Clearing requires you to put in 10 grand. Your broker says, don't worry, you only have to put in 500 when during, the daytime. You put in 500, your broker put in $9,500 per contract on your behalf. So they're loaning money to clearing. That's why when you start losing money, they liquidate you because they're going to make sure they get their money back. But clearing doesn't allow you to really go out there and trade these things for $500. That's completely against regulation, CME rule set. So when I see people that don't understand futures teaching futures, it's really interesting that people actually blind leading the blind and follow people that don't really understand how these things work. So you have to be understanding what you're actually doing. So if they charge you $500 but it really costs 10,000, pretend it costs 10,000 when you trade it. Don't go in there and buy 20 of them for $500. Because in that example, you're trading 20 times leverage. You paid 500 and they paid, well, you paid for 10,000 bucks, you put in 500, they put in 95. So you're basically almost 20 to 1. Don't lever up that much. If it costs 10,000, treat it like it costs 10,000. That's a very cool trick with futures. How do you know what the actual margin requirement is of something? You can go to the CME website. They track all of that. They set the method for establishing performance bond minimums. You can go straight to the CME website, look for margins, and they'll tell you the actual number you should gauge your trading on. So when you're trying to trade futures, just don't over leverage. Don't pretend it costs $500 and trade that in your account. That's dangerous, and that's just gambling. It probably makes sense why that person I was referring to on YouTube would trade in the last 10 or 20 minutes a day and blow up their account live on stream. Stuff like that. It just shows that people have no grasp on what they're doing. Even over levering in futures is very dangerous, and you have to let people know that that's a dangerous practice. Trading on margin is very dangerous in futures. You shouldn't do it. You should not. You should take it very seriously. Right? Risk and position management. Yeah, try to be less of a degen, bro. Like, we got you, dude. Don't worry about it. My advice to anybody getting into futures, it's the easiest place to get started. There's fewer rules, fewer limitations, better taxes, but it's also unlimited on or not unlimited, but like the risk is much higher because people enter that world without the self-control. And majority of people trading or teaching futures don't understand how it works either, and therefore they don't give you good advice. Here's the best advice you ever had. You go to the CME website, you get a number. You find out what the maintenance requirement is of that contract, okay? You take that number, you multiply it by 1.1, and you get some kind of value. We'll call it the initial margin so that you understand that that's what you should hold. That's what's required to enter a position. That's the bucket. If your broker charges you $500, you put in the 500 and then they put in the rest. Instead, you put in all of it. That way you're not over leveraging. You take the net lick of your account and you divide it by, so whatever your account value is, you divide it by the actual value to hold a contract. And then for what you've done is you've created a marginless cash equivalent trade for this particular thing as best you can. If this thing costs 10,000, you have 20,000, you can only trade 2, not 40. Off of danger. Don't lever up beyond what you're allowed to. If you trade just that equation in futures, then imagine this. Let's do an example. Let's pretend a contract is 10,000. I teach this rule to every futures trader I come across. This is the safety rule. Watch this cool, beautiful magic. While I'm doing this math really quick, can somebody tell me what the current risk interval is for the S&P? Because remember, a catalyst is what happens when the market has an unusual event, and markets tend to drop on those unusual events one risk interval before at least they hold, right? About 31 points. Yeah, let's say 31 points. And every 10 points of move equals $500 of loss. Okay, keep this in mind. Watch how beautiful this rule is. So in an event that the market just drops like a rock, you can imagine that you're going to lose 31 points, okay? Right? So 31 points, or 500 every 10, or 3.1 times 5 is 15500. Move that decimal over. 1550 you lose per contract, okay? So imagine that you had $20,000 and your broker charges you $500 a contract and you bought 40. You lost that for every one. Multiply that by 40, okay? What is that? Wait, 4, 5 is 20 through 2, 22 with your 2, $62,000 of your 20K account. You lever up, you lost, you blew up a third of the way down. You blew up after 10 points. You lost, your 28,000 went to 0 if you lever up. Don't do that. Let's do a safer equation. If it costs 10,000 to buy and you have 20, divide that up, it's 2. Of your 20,000, a catalyst drop you will lose if you use this rule of thumb, a catalyst, which is your most severe drop before it halts, can continue to fall hundreds of points, but your first stopping point is typically a risk interval. 31 points of drop when you only had 2. Look how much you lose. Right? $3,100. Is that what that is? Of 20,000. That's 15% on a very bad day. So while that's pretty bad to lose 15%, if you maintain that ratio, net lick divided by IMR, and you're just in a trade where lightning strikes against you those few times a month it does, you'll cap yourself to a 15% loss and you won't blow up, give or take. The risk interval is it's based on the average expected volatility of that thing. When the margin requirement goes up, is because the expected volatility of futures is going up. So risk interval will go up when markets are more volatile. When markets are more volatile, the catalyst is even more severe, but you bought less of it because the margin requirement went out. The beautiful thing about this equation is it scales with the expected volatility of futures. If you always follow this equation, no matter what the margin requirement is, you're going to target a 15%, give or take, or less of loss per catalyst that goes against you. Better than losing all of it in a 10-point move. So the equation I teach people when you're trading futures to make it kind of like a cash equivalent as close as you can, you just take your net lick, how much money you have in your account, divided by 1.1 times maintenance, and you get the maintenance from CME website. Gives you X. X is going to vary your account as long as the market stays between 0 and 1 risk interval. Remember, Oops, 0 and 1 RI. This is the last thing I got out here. Remember, DD band is 1 RI up, 1 RI down, isn't that right? And how many times does market just collapse through DD and keep going? Not really, right? It has to work its way lower. So you kind of get a stopping point at that spot. So imagine if you use this equation and you bought in the middle and it goes against you, you basically only lost 15% if you bag held to the top. If you're buying and if you're shorting in the or buying in the middle and it drops against you, you lost 15% as well, give or take. So the idea that a risk interval fluctuation, one risk interval change, either through trading to DD or a catalyst drops one risk interval, this equation keeps you from blowing up on a one risk interval move. And most trading days stay within a risk interval worth of move, don't they? So that equation is the you have to just fall asleep at the wheel and the market crashes in RI and then it keeps crashing and keeps crashing and keeps crashing. And then you blew up. But this lets you know that when you hit that irrational band on the DD, you know you're supposed to get out of the way. You're not down a fifth of your account or more. Do y'all like that? That rule is there. And as the volatility gets higher, which means the risk interval or the volatility gets higher, then the amount of V shape gets wider. That's volatility. As the volatility gets wider and wider and wider, CME makes the margin requirement higher because of that expected volatility, which means the percent stays the same. It scales up, which allows you to buy less. So on a percent basis, you are exactly the same because it scales up linearly with volatility. So they raise the margin requirement to 11,000, 12,000, 13,000. They're telling you the volatility is expected to be higher. So your catalyst drops to be slightly bigger. The risk interval will come through slightly bigger. So that design is designed to give you a guidance on how much you can margin the futures requirement and still relatively stay safe. And if you want to make sure that you choose how much you're willing to lose, this is just a rule of thumb. X is the max position size I recommend that keeps you from blowing up in one day, unless you are falling asleep at the wheel or markets crash to one risk interval and keep going. 31 points. And it's like a once a month kind of thing. So X is the max. You can always choose to come in much less than X. You can pick the percent. I only want to lose 7% of my account. I only want to lose 5% of my account per day, whatever. You can actually fix that to whatever you want and then do this equation in reverse. Figure out what your position size is for how much you're willing to lose. How many points or how much should I buy to make sure that I move a risk interval I only lose 5% of my account or whatever. You can choose that. So that equation is a good starting point for the max. I would recommend any trader ever. I barely ever go over that equation. I don't care if I have $1 million or $100. That equation scales. How do you what the risk interval is when they change it? We have a bot in Discord that updates it once a week. Now they change throughout the week. When futures data comes out, our next thing that we're doing is automating all of that stuff from the bot. So the risk interval will update in real time. So basically every day after the market closes, we'll update the risk intervals for the overnight session on a once a day basis. So when they publish risk interval changes, since they're still manually done, we conveniently do it once a week. But we'll do it every day and then it'll publish it. You'll have a tab that you can click right here and it'll say risk interval. It'll give you the list of all of them in case you want the reference point. And so it'll update in real time, which when we have the risk intervals, updating in real time means your DD bands will be able to be updated in real time as well. Futures ultimately helps you become more profitable once you switch to them. You love selling options, however, still do that, but no longer buy them. Selling options and day trading futures is a beautiful way to make a living as a trader. You would no longer short the market in futures, sell options against your position, make some premium if the futures go against you. If I were short the market right now and the market started rallying, I could short and sell puts. Right on my strike. So I can make a little cash selling the option. If the market goes against me, then I've made the full premium selling that option against my short and futures that are losing money. So I hedged out a little bit. If I sell puts and futures are tanking, because you are not trading in anything other than the actual price, you should be outpacing what you're going to lose in that options contract. So you can always cut out of one. You'll just dig into your loss a little bit as well. I mean, dig into your gain a little bit. You can always just sell options to make yourself a little bit of gain. And most days are flat and choppy. That's the way to do it. So like if you're trading in between hedge pressure today. Hold on. How are y'all? Chilling. And what's up, Elijah? Send me a message in Discord, everybody. Let's, for those, if y'all want to do those Pro Plus pop-up offers, here, let me send you a message really quick. Go here. Do this. Either go there, either send me a message, or message and ask for help and say I missed the pop up for Pro Plus only if you've been here greater than 1 month. Do that. And I'll walk you through how to upgrade. Because like I said, when live trading comes out, it's gonna be Pro Plus only. So essentially lifetime is Pro Plus, yearly is Pro Plus, extended trial is just Pro. So the extended trials in the future won't have the ability to live trade. And that's where we're gonna actually have differences in the platform. We haven't really had any major differences in the two packages other than the education. Pro Plus has like double the videos, just so that the trial is more concise and gets you like from A to B faster instead of bogging you down with a lot of videos. So then, yeah, anything, and anybody that wanted to grab that, we appreciate you supporting the group, and of course, and the reason, and again, just the reasoning for, you know, Pro Plus, just have to have a better, you know, more servers and things like that to facilitate that extra flow and all the extra data feed, throughput and such. So obviously we'd have to have that covered in the price. So it has to have a premium attached to it. Yeah, so you guys, yeah, enjoyed it through day. See you guys on Tuesday. I'm gonna get out of here too. So everyone go to Discord. Send me that message. We'll get you guys in the platform. Ladies and gentlemen, thanks for tuning in. Got that right out the door. Monthly hedge resilience being negative. Just kind of showing you how this works. It's hard to see anything other than a downside day today. I'm going to zoom in, give you the final look at this. Just so obvious out the door. The way hedge pressure, the way resilience, all of them work, pay attention, is that resilience has everything to do with when you are at the line. When you touch this line, you consult the tie break. When it touched the line right out the door, let me pick a color that's not orange. When you touch the line, consult. It's positive. Okay. When you're at the line or you're outside of the box, so interacting with the box, either side or the line, each of these three lines, you consult res. So right here, just 2 or 3 minutes out the door, we're right here, and I'm gonna consult. Res is plunging. About right here, we're pushing up higher, interacting with the box, and res is finally negative. Okay, res is negative. It means it falls to next resistance. That's all you got. That right there. Now you have monthly hedge resilience, which you interact with monthly hedge pressure typically towards the end of the month as it decays. So as the month goes by, like if price is held flat over the course of 1 month, monthly hedge pressure will actually like decay towards price like that. So the last couple of days, it's in the vicinity of we're going to play with it. And always, 2 or 3 days before you expire on monthlies, you will likely see monthly hedge pressure in the vicinity. So when you're touching it, just like any other resilience, you're coming through. Clear as day that we're breaking through monthly hedge. If the stocks are breaking through their own or trading below their own, then the S&P and its mechanism to track the stocks in the underlying will likely not bounce and gain positive gamma. It will receive a capitulation event as people flip to the other side more often than not. And monthly res was a perfect tiebreaker. This was as textbook as it gets. Do we all understand? Very easy day. But as you see, while resilience showed that, and monthly, again, you follow the next resistance. Where do you go from here? The only support we have underneath is bull zone support because DD is bullish. So my brain says, okay, we can crash through here and fall all the way to the bull zone and support, but to collapse, you need volatility. And I have VIX up right here, and there is no volatility. As a matter of fact, VIX is in a decay pattern. If VIX would have maintained above monthly hedge, then VIX would start to accelerate, which would start to accelerate the move. Because there's no volatility, you know it's not going to just trade straight down. It's going to have to work its way down, which is why I short and covered and short and covered. I did 2 trades in and out and just calling it a day. It's going to take all day to fight its way lower, if it likely does. And as you see, that is expected. But you know, every single pop to hedge pressure worth a short. Pop to monthly, that was my second short, worth a short. Pop to hedge, worth a short. How much do you short? It's really hard to say because it's all support in here. How far does it fall? Really don't know. So in the SPY, I can watch other things and say, well, looks like QQQ pivoted to the bottom of the zone. Okay, let's get out. I'm going to look at IWM. Are there supports there? I try to find any evidence I can of anything bouncing. And clearly, there's nothing in the way of IWM. And QQQ just filled its gap right here. So maybe it's an older gap. Maybe it's going to hang. Right? We have no evidence of there being a particular exit point. So it's like I'm just kind of scalping and winging my exit targets, right? With other things. My first short to here when I covered, it's because QQQ fell and started hanging right here at hedge pressure in the bottom of the spare zone. I was like, okay, let me get out. DD being positive, maybe things will probably exit a bear zone. So let me cover. Oh, we hit hedge pressure again. Let me short again. So I just know it's just, I really have nothing to go by. I just know the pressure is somewhat downward, but I'm not betting on a crash because this is completely indicate there is no volatility. So volatility means the V shape gets bigger. With no volatility, the V shape should not get bigger. This distance and that distance and that distance are actually getting smaller. Slightly smaller. They're not getting bigger. Can y'all see that? And so that's how you can kind of understand like the shape or what's expected today. I don't expect it to crash, but it's definitely not going to rally. It's not easy to see that there's a rally. That and that and that. It's not getting bigger. These are roughly equal. This one's roughly bigger than that. So if volatility is coming down, then the selling pressure is going to get smaller and smaller and smaller. There's really no crash if that's happening. Does everyone understand volatility? So that's basically why. Take what you can get out of the way. If you're expecting the market to capsize and fall on itself, easy to see that's not going to happen. If it was going to happen, you would see VIX start to move higher. So it's weird to see this trading lower with no volatility. It just means that it's going to move in tiny little burps that are going to get smaller. So if this falls, I can say that, you know, if I were to take a trade, it's going to definitely move this far, maybe a little bit lower, lack of volatility. So my reward is going to be that distance minus a little bit. And then when I say winging it, that's kind of what I'm doing. Why'd I exit my second trade like right here? Because I said, well, there's no volatility. It's not going to go further. It's probably going to be a smaller V. So I just kind of wing it. Okay, there's some green candles. There's some red. There's some red. Let me close out. If I were to short here, I can say, yeah, it's going to be less than or equal to probably that same one. You'll see how you can do that. Normally, you would short to next resistance or long to next resistance. You don't have a resistance in the way. So you can kind of gauge about how far it falls in chunks when scalping by looking at the volatility. If volatility was going up, then I'd expect the V's to get bigger. So whatever this distance is, I'd let it push a little bit harder and then I'd close out. Just by eyeballing it. With no other gauge. Pretty cool trick. I'm gonna wing it sometimes. Okay, cool, I'm out of here. See you guys on next weekend. All right. We love a Zoom call today. Promise. 2 o'clock Eastern. Zoom call. Come on over. Everybody send me a message Discord though if you need that upgrade. If you need the upgrade to Pro Plus so that you can live trade in a couple weeks, let me know. I'll show you how to get into it. We have a yearly option, a lifetime option, which is probably the best option. Then, of course, you have a monthly option for those of you who want to lock that in. Those prices do not change for you forever, yearly or monthly. Whatever you get on that pop-up deal, you will be able to keep forever, no matter what the price raises to for everyone else. Grandfather in, one of the inaugural members of the Rocket Scooter family. Just passed 4150 user accounts. We hit 4,000 a couple weeks back. We're excited to see us growing. Hope we get 10,000 by the end of the year. Spread the word. Keep us in your hearts and minds. And thank you for supporting the platform development as we push to continue to conquer the world of retail. Monday's a holiday. Enjoy yourselves. And Sunday's Father's Day. Happy Father's Day for all the fathers out there as well. We will see y'all.